Right, this will be a daily outlook into Monday, June 29th. Obviously, we are approaching the closure of the second quarter, right? Also, the closure of the month of June. Overall, you can see that the monthly profile for June is a consolidation profile, right? In my opinion, represented by a bearish swing to Z profile. Right here, you can see the Z developing. Price trades lower, higher, lower, and eventually, maybe we'll close back somewhere around 50% of the range. And since I last made an outlook, I wasn't able to make an outlook the week that just passed. But since then, right, I still have these levels identified on my chart, represented by a suspension block, which at the time of my last outlook was a discount array. You can see that the market had traded to 50%, had traded higher, right, and eventually, right, this is last week's profile, has created a market structure shift. Right, this was an intermediate term low. Market tried to trade above it, rejected at the rejection block, and then broke structure from there. Right, so overall, on a higher time frame perspective, obviously my drawn liquidity is still all-time highs, right? Because the profile of the year is still bullish. But from a lower time frame perspective, I do believe that the market should revisit some kind of discounted level. Look, it doesn't have to be this intermediate term low here, right? Again, this is an intermediate term low just like this one was, because, well, first of all, it's a swing low, right? But it's a swing low that fills 50% of an inefficiency, just like this one did. I'm not saying from a higher time frame perspective that it needs to do something like this, right? It could simply touch again the high of the fair value gap, overall respect the bullish order block located at these levels, and trade higher from there. But the way that the market has opened so far, okay, has opened as essentially, well, it's not a gap higher, but hasn't traded lower first before trading higher. I do believe that it's going to want to revisit this inversion array and likely reaccumulate into it to distribute lower, or overall continue the trend that it's been doing around it, okay, which is building high resistance price action. Right, so in terms of a buy side drawn liquidity, obviously there's all-time highs, right? The high of June. In terms of sell side pools, we have the intermediate term low, which is the low of June. On a shorter term basis, there's obviously the previous week's low. This can be an interesting PD rate, right? The previous week's low, because it resides near the weekly fair value gap, right? It can be that the market does something like this, but overall, maybe I don't know if it's going to be the next day or 2 days or 3 days or so. Overall, I would think the first half of this week, as it's the closure of a consolidation month, right, a bearish swing to Z, and we're about to go inside of a new quarter and a new month, obviously. I do believe that the first days of the week, I'm not saying they're going to be low probability, but I wouldn't expect anything too crazy, right? Such as a crazy expansion higher. More than anything, if I do believe that if there will be an expansion, it will likely be lower, okay, towards at least the previous week's low, if not lower, but primarily the previous week's low. Because we come from a market structure shift on the daily, in my opinion. Right, although the range is kept here in a consolidation, to me this is pretty significant, I would say, right? This short-term low, which isn't just any short-term low, again, is an intermediate-term low. The fact that that price broke through it and then reaccumulates into it tells me that this is a daily mitigation block, right? Price had a high, a low, a failed higher high, right? Rejected at the rejection block, and then from there broke it. Okay, so the wick here, I do believe that maybe just using the wick, but overall the quadrants of the the suspension block here, if will not offer an expansion lower, then will probably lead to high resistance. What I'm saying is I don't believe that in the next day or two the market will reclaim this level without a problem. And we'll look at the reason why also on a lower time frame, but we'll look at this when we look at the 4-hour chart or a 1-hour chart, but this is a lower time frame intermediate term high at these levels. Okay, so and again, the fact that the market opens without a wick, right, immediately starts trading higher. Yes, it is from discount. Yes, it is from a bullish order block, but I'm not sure how going into a new month, right, then this new month will be opening inside of this week here. I do believe it's low probability that the low of the week has been put in already. Okay. So overall, I'm still looking at what is now a premium array, right? So an inversion suspension block. This has also a mitigation block through it, right? So the wick of this down close candle. I do think that these are important levels. And in discount, we're still looking at the range of a weekly BISI, right? This level so far has created an intermediate term low from it. Because the market overall from a higher time frame perspective is still bullish. Obviously, the yearly profile, in my opinion, remains classic buy. I'm not saying this week, but well, this is maybe more an analysis going inside of Wednesday, right? So maybe I'll talk more about this on Wednesday as we're going to go into the new quarter and the new month. So I won't cover that right now. Maybe let's just talk about a short-term perspective, right? Premium array, discount array, and I do believe that the previous week's low can be important as a sell side pool, okay, especially if the market trades higher, trades at these levels, reject. I'm going to want to see how the previous week's low is traded, and I want to see how this intermediate term high and the previous day's high is traded. Why? Because both these levels, right, the intermediate term high here, it's also a daily intermediate term high, but it's more obvious on the lower time frames, right? But essentially both of these wicks come inside of the inversion array here. Okay, so I want to see if the market will displace these levels or is it going to reject around these levels, right? And meaning, in my opinion, creating divergences. Okay, so either divergence at the previous day's high or at the intermediate term high itself. Okay, so overall the daily chart is telling me that we're probably not going to see the clearest, highest probability price action. Why? Because we are at the closure of a consolidation month, right? So a bearish swing to Z. Okay, so because of that, I do believe that the market will want to wait, for some kind of new time horizon, such as a new quarter, a new monthly open, non-farm payrolls. Okay, so, and overall, I mean, the market has been chopping around 50% of the month here, right? Especially in the last days of the previous week. Price has been very high resistance here. Okay, so I do anticipate that it will continue to be like this. I'm not saying the whole week, but likely the first half, right? So the first few days of the week. I wouldn't expect the cleanest price action. This doesn't mean that there can be trading opportunities, but if there will be trading opportunities, what I'm interested in is to see if the inversion array that price is close to that range, is close to that range from these levels. Does price create divergence around the daily highs, right, created around the inversion array, or does it create fair value gaps through these levels, right, through the daily highs? And so, okay, if the market were to trade here, create divergences around one or the other, then I do believe that the drawn liquidity, or at least a low-hanging fruit drawn liquidity, will be the previous week's low, and from there we're looking at the range of the weekly discount BISI. Okay, and vice versa. If the market were to displace, say, the previous day's high, then I want to see how the market trades on the intermediate term high, any divergences or displacement created at these levels, and if the market displays at these levels, then I will be anticipating all-time highs as a drawn liquidity. We can look at a 3-week look back. So let's grade the range. Okay, so as we saw on the daily chart, right around 50% of the month here, the last few days have been high resistance around this range. And again, because of the way that the week opened, I think it's low probability that the weekly low has been put in at these levels. I wouldn't have minded if the market opened, traded lower, and immediately started to trade higher. That would have been much better for me. Right, take out the previous week's low and start trading higher. But the fact that it hasn't, to me, is suspicious. Okay, so okay, well, let's analyze this range, right? The 3-week look back. Obviously, the highs are very clean, but we saw on the daily that the market comes from a market structure shift, right? There's a mitigation block created here, and this daily mitigation block looks like what? It looks like this, right? Which is a bearish breaker. The market accumulated lower, doing so here as we saw on the daily chart, creating an intermediate term low, right? And you can see that on the 4-hour, created by a short-term low that has a short-term low on its left, a short-term low on its right. Tries to trade higher but fails inside the rejection block and then displaces the range, right? Creating a series of fair value gaps through the down close candle. Right? And so where does all this happen? This happens at 25% of the 3-week look back. Okay, so the fair value gap located at these levels, in my opinion, is significant. As you can see, the high of Thursday comes right at 50% of this 4-hour BISI, SIBI, right? This is identified by this, and this is why I'm saying, right, at these levels here we have an intermediate term high. Okay, so because of the way that the market opened, I have a hard time believing that the market will want to displace this level. Again, if the market would have opened, take out the previous week's low and then trade higher, then I wouldn't have a problem assuming that it's going to do this. But because it hasn't, and because we're at the closure of a consolidation month, I just have a hard time believing that it'll start doing this from these levels. Okay, so at 25% of the range, so here in premium, whatever, 75% of the range, the upper quadrant of the range, right? So in premium we have a 4-hour bearish breaker represented by a daily mitigation block, and we have a fair value gap right through it. And this fair value gap, right, 50% of it has been filled already last week. Okay, so creating an intermediate term high at these levels. At 50% of the range, you got a couple up close candle here, but in my opinion, these are not high probable order blocks because these levels have not been displaced through, right? You don't see any strong closures below them or fair value gaps below them. Overall here, 50% of the range is high resistance. Right, and again, that's why I'm saying I'm not sure how if the first half of the week will be high probability because we're opening around 50% of this range. And in discount, while we have the range here of a bullish order block, right? This is also a level on the daily. So this is definitely an interesting level. Right, so overall, we're left with these two PD rays, right? We're left with a SIBI and we're left with a discount order block. So I do believe very likely that the high or the low of the week should form around these PD rays, or at least intraday, daily highs, daily lows, or sessions will be sensitive to these quadrants. Okay, as price is trading around them or inside of them, these could act as good draws on liquidity, or to identify intermediate term lows or highs inside of sessions. Okay, now if the market again will be bearish, I'm not sure that this intermediate term high will get traded to. What could happen is a divergence with the S&P 500 at these levels, where maybe the S&P 500 trades above it while Nasdaq fails to do so. If that's the case, then where could Nasdaq, where could be a level where you would anticipate a shorting opportunity if the profile of day or the session profile, right, matches with that idea? Well, following the formation of this intermediate term high, the market has created another fair value gap at these levels, right? And you can see that only 25% of this fair value gap has been filled, right? And then we have the previous day's high, which forms at the low of the SIBI, from there trades lower. Okay, so if the market will be bearish, again, I don't believe that it will trade here, but I do believe that it can trade to 50% of this fair value gap, take out the previous day's high, and create a divergence at the intermediate term high, right, to then continue trading lower, right, and overall continue this kind of trend that it's been doing around 50% of this range until the month closes, right, and until we get the new quarter. If not, if these levels are displaced, then I do believe that the draw liquidity will be all-time highs. I believe that if this intermediate term high is displaced above, then I wouldn't see any reason for the market to come back lower from here. I do believe that is then going to use it as, right, this would become a bullish order block, and the market will trade higher from here. Because overall, on a higher time frame premise, right, we are still bullish, and all-time highs as relative equal highs, right? Okay, so I will be keeping these two levels for the week, but I'm also paying attention to the previous day's high and the previous day's low, right? The previous day's low is also the previous week's low, and at the previous day's high, what I'm interested in seeing is how the market will treat this fair value gap. This is the fair value gap that forms from an intermediate term high. And I'm interested in seeing if there's any divergences around either the previous day's high and or the intermediate term high. On a 3-day look back perspective, here overall you can see the chop. We can analyze the last 3 daily profiles to give us an idea of what price is likely to do. So on the 3-day look back, now this is debatable. In the moment I was looking at it, and I believe that this was some kind of consolidation rate on news, but in my opinion it's not, because it doesn't really match. It doesn't have the time of day element to match the characteristic of a consolidation rate on news. Overall, I ended up labeling this as a seek and destroy, right? The market creates a range in Asia, then London stays internal to that range. New York ends up taking New York AM ends up taking the high and the low of that range. Eventually the PM session ends up taking the low and the high of that range, right? So creating something like this, right? Trades higher, trades lower, trades higher, trades lower. Doesn't really have a trend. Okay, so a consolidation profile, right? And this day was followed by here a classic sell. So expansion, consolidation, to then Thursday being a New York reversal profile, 8:30 high of day, right? So expansion, consolidation, expansion, and the previous day's profile being a swing to Z, right? The market at the open creates the swing here in Asia, and for the rest of the day chops. That's so overall the market comes from expansion to consolidation, right? So because of that, I do believe that the market will want to continue trading lower, okay, as we come from an expansion to a consolidation. Again, if the week would have opened and taken out the previous week's low, right, which is, I don't understand what's happening here, but right, if the market would have taken out this double bottom at the weekly open, then I wouldn't have a problem targeting the intermediate term high or all-time highs. But because of the fact that it hasn't, I'm paying attention, and because of the fact that price comes from expansion to consolidation, right? Again, it's not only the fact that it didn't sweep, but also in terms of the phase of price delivery. I consider this expansion low probability. Now, I might be proven wrong, which is fine, but for me to be proven wrong, I would need to see a displacement above the 4-hour intermediate term high here, right? You can see that 4-hour intermediate term high. Now, gun to my head, because the market didn't do this, I believe that because it didn't do this, and because it comes from a New York reversal to a swing to Z, I do believe that is going to want to trade to the previous day's high, right? There's that fair value gap that we looked at on the 4-hour here, the one that forms, after the intermediate term high has been created, and will fail at these levels. Okay, it could chop. Right, the daily profile here today doesn't need, say, to be New York reversal. Price could trade at these levels until New York to then consolidate, and then Tuesday or Wednesday might trade lower. But again, I'm not so convinced that this level will be displaced. I'm going to pay attention to divergences around the previous high and the intermediate term high, and most importantly, I want to pay attention to this fair value gap, right, as it's a balanced price range on the 3-day look back. Right, we had a move higher, then a move lower, so this is a balanced price range. You can see that this fair value gap is also located at, it's located in discount, right, located right at 75% of the range of the 3-day look back. So 50% of it, right, as these levels here have not filled them, right, I do believe that the market could stall around here, 50% or 75%. I'm not so convinced again that this will be displaced. If not, can we find anything obvious in discount or at 50%? At 50%, the range is pretty high resistance. There's a couple rejection block at these levels, but these rejection blocks comes from overall the premium SIBI, right? And at 25% of the range, so in discount, nothing really obvious in my opinion, but the market could create here a bullish order block, right, as it's going to trade higher here into premium. So if it does so, then I do believe that this series of down close candle could become relevant for the daily profile, right? Say something market trades here and then chops around these two levels. Again, the higher time frame premise is bullish overall, but we are trading inside of a consolidation month, and we are trading around 50% of this consolidation phase. And right, we're approaching a new quarter, a new month. So if the market were to create here a bullish fair value gap, a bullish order block in discount, and then trade inside of the fair value gap created by an intermediate term high, that's why I'm saying it could be that for the first day or two of the week we see some kind of choppy price action, a continuation of this trend here that we've been seeing until an event, right? New quarter, non-farm payrolls, whatever it is. Okay, so I'll do a little recap and end it here. On a daily chart, we looked at the levels of a premium inversion suspension block, and we looked at still that the weekly BISI that has been holding price. Overall, the market is trading at around 50% of the month of June. And month of June being here, in my opinion, a bearish swing to Z. Right, the first week creating the swing, and then we see the Z forming. And on a shorter term perspective, right, the market has broken an intermediate term low, created a daily mitigation block, and doing so through an inversion array, right? So very important to see if the market trades back inside this level, which obviously is very likely. Does it do so creating divergences around daily highs forming inside of this inversion, or does it displaces, right? Now, if it displaces, then we're looking at all-time highs drawn liquidity. If the market fails to displace and reclaim, right, this inversion suspension block, then in my opinion, the low-hanging fruit drawn liquidity will be the previous week's low, followed by this, right, the weekly BISI, the quadrants of the weekly BISI. On a 4-hour chart, we analyzed the range. We saw that at 50% of the range, the market is very high resistance. And we saw that in premium, we have the range of a fair value gap cutting through a 4-hour breaker. And we saw that in discount, we have the range of a bullish order block. Right, so again, in my opinion, very likely the market will stay stuck in between these levels for a bit. Both of these levels are a pretty high probability in my opinion. Why? Because this here is a daily market structure shift. This is a fair value gap cutting through a breaker block. And here we have an order block that leads to a divergence. Right? So in my opinion, both these levels are high probability. And because of the time aspect and the open of the current week, right, the way that it opened, I do believe we could be seeing this for a bit. And on a 3-day look back perspective, we analyzed the latest phase of price delivery. We saw overall that price comes from an expansion, so a New York reversal to a bearish swing to Z. So this is expansion to consolidation. We saw again that at 50% of the 3-day look back range, we don't have anything significant. We have a couple rejection blocks, but these rejection blocks form inside of the 4-hour SIBI, which is the 1-hour SIBI here, which is located in premium, so right at 75%. And we saw that at 25% of the range, we have a potential bullish order block forming. Right, obviously all depending here on how Asia or London will trade going inside of New York. This could become the range of a bullish order block. Okay, so if it does, it will then be important to see how the previous day's high here is traded. Okay, is there divergence or is there displacement? But most importantly, aside from this level, I'm really interested in seeing how the intermediate term high will be treated. Right? Is there any divergences going inside New York at these levels? Or will New York open, right, something like this? An expansion through the previous high, but still failed to take the intermediate term high. Right? Will New York open as a consolidation? Well, then in that case, this can lead to either a classic buy day or a swing to Z, right? Because again, we'll have here a discount order block and a premium fair value gap. This could lead to something like this. Then in case of the reversal, I would need to see something like this, right? New York trades to 50%, creates a divergence, and then trades lower.